Hey everybody, this is Andrew Perlin and welcome to another edition of Insurance Explained. Today we're going to talk about homeowners insurance and what's actually covered and to a certain extent what's not covered. Most people think they know what their homeowners insurance covers, right? They just buy it and don't worry about it until they have to use it. That's when they realize they may or may not have a problem. I review policies every day, and what I've learned is most homeowners are technically covered, but they are not always protected. And those two things are not the same. And most people don't find it out until it's too late, until they have to file a claim and they realize that something is not going to get paid out the way they think it's going to. So today I want to walk you through your homeowner's insurance policy, tell you what's actually covered, and you may be surprised on what's not covered. The story that I like to use when I talk about this is what I call the jewelry gap. I reviewed a policy for someone who had a wedding ring that was worth about $15,000. A nice wedding ring. It was beautiful. Obviously, it's a wedding ring, so it means a lot to the couple. And they assumed it was fully covered under their homeowner's policy. And they had good reason to think that because the personal property on their homeowner's policy was somewhere in the neighborhood of $400,000. So they just assumed that this piece of jewelry was going to be covered. What they didn't realize is that most standard homeowners policies cap jewelry at around $1,500 unless it's specifically scheduled. Or what I mean by scheduled is that you're basically buying a separate insurance policy for that item. So they had coverage. I mean, technically they had coverage, but they weren't protected for what the ring was actually worth. So when they had to file the claim, they were surprised that this expensive ring was not going to be covered the way they wanted. And of course, they were upset. What does it mean when you have a policy and that you're covered and that you're protected? Well, covered just means you have a policy, and that's all it means. You have the policy. If you have a loan on your home, you need a homeowner's policy. So you have it. So you're covered. Great. That's awesome. But protected means the limits, the structures, the endorsements actually match your life today. Insurance does not usually fail because you picked the wrong company. That's very rarely happens. They're all pretty darn good. It fails because no one adjusted the policy as your life changes. And we've talked about this before in episodes past that you have to assume that your insurance policy will not change with your life. You have to change it. So, what does your homeowner's insurance actually cover? Well, most standard homeowners policy will break down the four major sections. First is dwelling, or coverage A, as it's called. In coverage A, or replacement cost, is another way to put it. This is the cost to rebuild your house from the foundation up in the event of a total loss. This is not market value. This is rebuild cost. And we're talking about labor and materials. And that number fluctuates all the time. So it's important that you not only have a good replacement cost number, but you have a way to enhance that number or make that number bigger in the event something changes before the insurance company has a chance to reevaluate it. The next one is personal property. Personal property is usually your furniture, clothing, electronics, appliances, things like that. The basic rule of thumb is take your home, flip it upside down. Whatever falls to the bottom is considered personal property. We had talked about just a moment ago, jewelry or expensive jewelry or any item of inherent value is not covered under personal property. So the jewelry that I mentioned earlier, a collectible, a piece of artwork that is worth a lot of money, that stuff is just not covered under personal property. They're basically just covering the things that you find in a normal everyday American house. Furniture, clothing, electronics, appliances. Now, people ask me all the time, well, what if the furniture or the appliances are more than $1,500? They will cover that, but these specialty items are something that need to be scheduled, and homeowners isn't going to cover it. The next one is loss of use. Loss of use is if you can't live in your home because it's uninhabitable due to a covered loss. We see this a lot with fire, smoke damage. There's money set aside that you can actually get an extended stay or a rental home or something along those lines until the home is built or rebuilt. What most people don't know is that some insurance companies cap that, like they actually cap the timetable for the home to be rebuilt, or they cap you at how much money will they pay out. So you think you're covered until it takes longer for the home to be rebuilt, and next thing you know, you run out of money. And of course, the last thing is liability. This is if someone gets hurt on your property and you're legally responsible. The big one when it comes to protecting assets. Right? So you may have a certain amount of liability and it might not be enough. So these are all things that you have to take into consideration. But on paper, this sounds great. Like it's a great comprehensive policy, and it is. You got all those risks are covered, and you should be fine. Well, here's a list of things that just aren't covered under a homeowner's policy that most people think are. First of all, flood. Flood is not covered. What's a flood? Any water that hits the ground first and gets into your house and causes damage is flood. So you don't have to be near a body of water, or you don't have to wait for this torrential downpour to cause a actual flood. Any water that gets into your home once it hits the ground is considered flood. That's a problem. Not covered under homeowners. You have to get a flood policy for that. Sewer backup. Most homes have sump pumps now. Well, a sewer backup is an optional coverage. You have to add that. If water comes through the sump pump hole and floods your basement, if you don't have sewer backup, not covered. Most people just think it's covered because it happened inside the house. You have to add that one. As we had mentioned before, high value jewelry, not covered unless you schedule it. And again, all scheduling means is you are basically buying an insurance policy for that item. Running a business out of your home, 100% not covered under a personal policy. It just isn't. So the business property is not covered under your personal property, and business liability. Someone comes into your house for a business reason, they hurt themselves, your homeowner's policy is not going to cover that liability. And I see this one a lot too. Major renovations to your home, and you just forgot to let the insurance company know that you did it. People add an addition, they finish their basement, they do whatever they got to do, and the next thing you know, their replacement cost does not match because now the home is worth more, but the replacement cost didn't jump up to meet that number. There's a total loss, and you've got a delta of what the insurance company will pay and what is actually covered. Again, the policy is not broken. The assumptions are broken. And if the one thing that you get out of any of the videos that I have made so far is you've got to make sure that you change your insurance to match your life because it will not change by itself. So homeowners insurance isn't something you buy once and forget. You can't set it and forget it. Most people look at their homeowners policy when they go to refinance or right after they buy their house and they don't look at it again. As things change, as the home changes, as your life changes, you absolutely need to look at this stuff and make sure it matches. It should evolve as your life evolves. Marriage, renovating the house, kids, your asset grows, a side business out of your house. These are the things that will change your exposure. Protection isn't about having a policy. It's about being aligned with your life and your policy. If you haven't reviewed your homeowner's policy in the last couple of years, pull it out right now, take a look at the deck page, and at the very least, check your dwelling limit. That's always a good place to start. Okay. Now, obviously, you might not know off the top of your head what the rebuild cost is, but if you haven't looked at that thing in a while and the replacement cost hasn't changed in a couple of years, man, you may want to take a look at it. The good news is most insurance companies will reevaluate the replacement cost number every 2 to 3 years. But again, if you made an adjustment to your house and they don't know about it, that number might not be good. So the replacement cost is always a good one. You have jewelry, expensive jewelry that's not on that policy, add it. It's called scheduling it. Or you can buy a personal articles policy separately. You got to cover that because it will not be covered otherwise. Oh, and while we're on that topic, you need to have it appraised. No insurance company is going to issue you a policy for a personal article without an appraisal. Okay. And they're certainly not going to pay a claim without it. So make sure you get that done. And remember, in closing, if your life has changed, your coverage should too. Let's review it. Thanks for being here. I do appreciate this. Is Andrew Perlin out of Howard County, Maryland, with a new edition of Insurance Explained. Please like and share the link below. Watch us on YouTube, Facebook. If I can be of any service to you, let me know. Comments are always welcome. And if you need somebody to review your insurance without any hassle and without any pressure, let me know. Thanks a lot, guys. Have a great day. Bye.